So, forbearance seems to be a hot topic. Let's chat about that a little bit in conjunction with the real estate markets and mortgage financing. Let's kick it off with Marie Hunter with Remax Professionals. Can you give us an update on the real estate market as we head into the summer?
Absolutely. So, welcome to my home. Like many of us, I'm working from home. Just wanted to give you a quick snapshot of what's going on. It's been exactly 1 week since we've been able to do in-person showings in most counties in the Denver area, and things are really ramping up quickly. In just 7 days, we'd have 1,521 new listings, 1,694 pending sales, and 1,317 closed transactions, and that's about double compared to what we were seeing during the stay-at-home order. We're also making sure that we abide by the CDC guidelines and wearing masks and gloves and doing what we can to keep people protected.
Marie, how does this market compare to the 2008 recession?
That's a good question. So this is quite a bit different. Going into this, we had a fantastic market, low interest rates, low housing inventory, great buyer demand, unemployment levels that were great. We expect that to come back relatively quickly, and we're already seeing that in just these past 7 days. It should be good. So if you're a buyer, what you should do is reach out to Shanna first, get pre-qualified. She's fantastic to work with, and then connect with me and we'll figure out what we can do to get you a great home. And if you're a seller, give me a call and we'll come up with a plan for the perfect timing for you and your home. So now I'd like to turn it over to Shanna. Shanna, can you talk to us a little bit about what loan programs are available during these unprecedented times?
Yeah, certainly. Thank you very much. So at the very beginning, there was a little misconception when the Federal Reserve lowered the rates to a target of 0 to 0.25%. In the sense people thought it was a direct correlation with interest rates. That's not quite true.
So what is the federal fund rate?
So the federal fund rate is the rate that banks charge each other to lend to the Federal Reserve overnight. While it's a factor in the mortgage interest rates, it's not the only one. Capital markets are what heavily dictate what the mortgage interest rates are going to be based on their trading of debt instruments. When our economy started to change, so did the appetite of the investors. Loans outside of the regular vanilla conventional conforming, which is any loan under $510,400, they started to look a little bit riskier. So those products increased, those rates on those products increased, as well as the tightening of their guidelines, such as the minimum credit score required.
So Shanna, what are the current interest rates doing now?
Right now, Marie, rates for a conventional conforming loan are at an all-time low. Program guidelines are starting to loosen a little bit, but what remains to be seen is the effect on the market due to the CARES Act, specifically the mortgage forbearance option that was rolled out. So to talk more about that, we got Dina Falvo from Advantage Credit. What's your take on forbearance, what forbearance could mean for consumers?
Well, there's a lot of information on that right now. And actually, this situation is changing almost daily, but definitely weekly. We're getting new information all the time. So there's a couple of things that I think are important for the consumer to know. One is that just recently, last week, in fact, Fannie and Freddie came out with an announcement. And that was that, typically when you go into the forbearance program, let's say you choose, you're going to go into forbearance for 3 months and then pick up your payments again on the 4th month. Well, typically when you go into forbearance, the agreement is that you will pay those 3 months that you missed in one lump sum on the 4th month when you come out of forbearance. But Fannie and Freddie announced last week that that's not going to be a requirement. You're not going to have to pay those 3 months lump sum or 6 months or whatever it is that you went into your agreement with. You won't have to pay that in one lump sum. That will just be tacked on to the end of the note. So that's great news. Great news for people who are in a Fannie or Freddie loan. So it is my suggestion that consumers call their service provider, make sure they know what type of loan they are involved in and what the expectations of their service provider are. So what are the repayment expectations? What does that look like to them? And that make sure that that's all in writing and that it can be in writing, given to them via email or in a letter in the mail. They need to know and have that on hand, because it's important to have something like that to refer back to. The second point I want to make about that is the reason why is because, as you know, the mortgage company does a wonderful service called the rescore service. And in order to rescore, what we do is we take documentation to update the credit report. And that information that you received from your mortgage company in regards to your forbearance, that paperwork documentation is going to be crucial for a rescore. So I highly suggest that anybody is staying in communication with their company, their mortgage company, and keeping that information on hand safe so you can access it. The last point I want to make on that is that primarily everything that has to do with credit reporting is automated. The whole system is automated. So we expect there to be some types of mistakes made, you know, some type of misreporting. I highly suggest that borrowers monitor their credit right now. You can go to annualcreditreport.com and monitor your credit for free, or you can do it yourself. You don't have to hire someone to do that, but it's a great idea to be monitoring right now, so that you can see in case there are mistakes made in regards to late payments or missed payments or things like that, because we're not sure. We just don't know how the bureaus are going, or how it's going to be reported to the bureaus in regards to what the codes are. There's very specific codes in regards to what we do. We make a late payment, we have a missed payment, our delinquencies, forbearance, all of those things are coded, and we suspect that there will be some mistakes made in regards to that. So that's my suggestion for right now.
So Dina, do you think that someone going in forbearance, it'll hurt their credit score? Or do you just not know?
We just don't know. We can't say one way or the other, because again, we don't know how it's going to be coded, so how it will be reported specifically. There are, you know, if you typically in a forbearance, how it was always before this is that if you went into forbearance and you were current on your payments, you would continue to be reported as a current, but we would be able to go back and look at the history and see that there were missed payments there. So we would know this person is in forbearance. However, if a person goes into forbearance in delinquency, it'll continue to be reported as delinquent. So it's really, really important for a person who's going into forbearance or who wanted to make this decision that they did it with full cooperation and communication with their mortgage company.
Wow, great information. And we will have the link to the free credit reports at the bottom of this presentation. All right, well, ladies, I want to thank you so much. And let's keep it light, stay healthy, stay safe. And thanks to everyone. Bye-bye.